The RBA rate cut. Did the banks get it right with holding some? We'll discuss that one. What stocks could benefit from a lower interest rate? And how in the hell did the Dow get up over 500 points this morning? I'm Peter Switzer.
And I'm Paul Rickard.
And we're mad about money. I'm also mad about that false start, Paul, but let's get on to the interesting story yesterday. The RBA cut interest rates. You didn't think they would?
Look, no, I thought they would, but I don't think they need to.
Okay.
And I actually think, Peter, the bank's got it right with holding some, right?
Oh, yeah, you would say that as an ex-banker.
Look, as an ex-banker, I mean, banks lose money.
Your bank didn't withhold.
Yeah,
Matt Common handled it over, CBA.
I actually
NAB handled it over.
I thought Shane Elliott was incredibly courageous.
Yeah.
Only to pass on 18 basis point, withstand the bullying from Treasurer Josh Frydenberg.
Justifiable bullying, I think.
What you got to appreciate, of course, is that banks actually lose money when interest rates fall. That is because there are some deposits they have you simply can't cut. If you're already paying someone 0% or 0.01%, you can't cut the rate, right? There are pensioner accounts out there where you have to pay 1.5%. Yeah. They can't be cut. Yeah. So when interest rates, the Reserve Bank lowers the cash rate, it's very hard for banks to maintain the margin on their deposit book. So you know, they're right to. I mean, they get bullied into this stuff.
But Paul, being in a banking game means that lots of times you win, just occasionally you lose. I think Shane Elliott has hurt his brand.
That's probably true.
Yeah, the problem for ANZ, and you know it as well, they're not as diversified. They're an old-fashioned bank in many ways, aren't they?
They are.
And that's why I understand why he did it. But I do think it's a bad thing for his brand. Matt Common's got it right. Your old mentoree, the person you mentored when he was a kid banker, he got it right, handing on, and NAB did as well, because NAB doesn't need any more.
NAB doesn't need. Westpac did. Look, I think the problem again is let's just put that to one side. Is that I don't understand why the Reserve Bank is cutting interest rates. The economists all think it's a great idea, but you know the next cut. You know, again, it's going to be harder for the banks to pass it on. So, and I think there was a good argument yesterday. If the Reserve Bank is so serious, why does this cut rates by 0.5%? Why this fiddling around a 0.25% now and a 0.25% now in 3 or 4 months? It's
it's a good point, but it's not a right point. See, this is insurance in case this trade war goes really. If it really goes badly, we're looking at a global recession, and that's when the other cuts
I'm on the side of the depositors, Peter. And I think the RBA has got this wrong.
That's the defence of the scoundrel.
All this wants is Governor Phil wants the headline. But anyhow, let's move on. Okay.
Next one. So, what stocks could benefit? Switzer Dividend Growth Fund. We pay dividends and we're competition for term deposits.
I think all the yield stocks are going to benefit. I mean, banks will benefit not because their profits will go up, but simply because the yields are so high. Now, we've said that all along, and it's when all the negativity about banks and the Royal Commission, but the yields are over 7.5%.
Could the yields be affected by the fact that the banks can't pass on this?
I think we've got, look, Westpac is still possibly, there's a dividend cut still coming from Westpac, but I think the others should be okay. And even if profits are flat to down, I mean, look, the yields are still reasonably attractive. So that's why banks' share prices have gone up, notwithstanding it's not good for profits. Right. I think anything that's a yield-sensitive stock is going to benefit. Hopefully also we'll get to see a lower Australian dollar. Now, it's interesting as we lead to the next story about the US now talking about cutting rates. And the Aussie dollar's actually gone up on the back of this announcement. But theoretically at least, a lower interest rate should mean our dollar keeps weakening, and that should help lots of stocks. I mean, in that sort of trade exposure.
The currency-sensitive type stocks.
Yeah, I mean, and you've written about a few in other articles, Peter. I mean, stocks like, for example, Link with its exposure to the UK, Macquarie Group with its global exposure, CSL, even
Costa Group,
BlueScope, which has got more than 50% of its earnings overseas. All those companies will benefit when they're translated back into Australian dollars.
Okay, right. So let's go to the final one. How come? Like when I woke up this morning, you know, with all this trade escalation, trade war escalation, I thought, how could this market be up over 400, finishes up over 500?
Well, I mean, like, how can the US Fed turn around from a position so quickly where it was raising rates? Now the Fed governor is talking about he may have to cut rates. The market's got it calling for it. I mean, like the psychology changed in the US in the space of less than 5 months. Well, when I first used the word patience in, I think, the 20th of December last year, we're now the 4th of June. So we've now gone from being, you know, before the 20th of December last year, interest rates were going up in the US. It was a question of how many raises.
Donald said, I don't like that.
Donald said, I don't like it. The Fed governor then invented this word patience, which implied maybe they weren't going to raise it now. And now they're going to cut. That's what the governor was saying yesterday.
Well, what's happening is
implying they're going to cut.
Donald has taught the world not to be consistent. That being inconsistent and being fly off the handle and say anything you like actually works. And
I think the counter argument, Peter, notwithstanding the Dow's rally, I mean, when interest rates are low, it's got to be good for stock markets, but it does mean the economic growth is slowing. So that's what you should be worried about. But in the short term, you know, it's good for stocks. And I guess we get into that squeeze situation, you know. I think yield investors, you just need to be really patient, right?
Well,
you got to, sometimes your money in the bank account earning 0% is actually a good rate of interest, right?
Yes, true. I just think what's happened is the whole world of central bankers, and they are by nature cautious people. They're like parents. And Donald is like that misbehaving child. And they're watching him and saying, what's he up to next? What's he up to next? He's going to cause a recession. We better cut interest rates. They're taking the counter actions to try and offset what Donald might do.
I think another way to look at it, Peter, is just listening to what Donald said. Donald told them to cut it, and they're cutting it, right? So anyhow, it's a crazy world. Interest rates are going down ever again now.
Right.
The cycle's turned around. The up cycle is over. We're now in the down cycle.
Living with Donald, it's unbelievable. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.